All right. So up, let's see, 64 BPS, exceeding the upside implied move by about 13 bips. A lot of that on the back of being able to open above gamma neutral, and get some support from the market makers throughout the intraday. That seemed to lead to a lot of netting off in the bot side positioning, but an accumulation of short puts between like 68.50 and 68.90, probably supporting more upside into tomorrow. However, I think it probably would be beneficial for vol sellers if we fell back into that range a little bit at some point for them to sell more supportive puts. So maybe out here on ES we would see like a pullback towards trend. Pullback towards trend before moving higher would be probably ideal. So like 69.1775 and then mean revert into Wednesday's data. Um, but yeah, I guess we'll see if they can hold this level. Seems a little unlikely. This was already pretty slippery through the intraday. Uh, Over here, yields at the top end of the curve falling, so a little bit more rotation into bonds, mostly in the belly and the two and the fives. But yields coming down on the 10, 20, and 30 as well a little bit. Why are these all disconnected? Commodities doing really, really well today after the geopolitical risk rose with Venezuela. Gold up almost 3%, silver up 4.6%, copper 5.24, agricultural commodities up 144 points, and oil ending the day up 185. The oil move's actually kind of interesting, but obviously, BRICS, OPEC, very much in charge of oil prices right now, and they're not going to look kindly on the U.S. Doing a little regime change in a major oil producing nation. Um, Correlation didn't really bounce back today, but 3 month correlation and 1 month core both stayed fairly stable after the drop on Friday. So throughout most of today's session, actually 3 month correlation rising just a little bit. Interestingly, volatility up today, both on VIX 3 month, and cash VIX. Um, Probably a little bump and move with the move in yields, so should see some volatility returning to bonds. I think that'll accelerate into the end of the week as we start to get the labor data and labor data revisions. New all-time high on the carry leverage, getting real close to full 10x there, but leverage on the front end starting to kind of decline a bit. Forward yield on volatility at negative 9.28%, and a little bit of pressure, quite a little bit of pressure from silver. I mentioned last week that this looked like silver was going to run, and we definitely see that today. A little bit of pressure from silver on the carry trade, and that's starting to increase that cumulative cost to carry. Skew falling pretty sharply over the last several sessions. Why are these so annoying? Breadth looks like shit. Um, I think that improved a little bit today with Dow and Russell moving up so sharply. But ES and NQ ended up lagging despite having the lead in the overnight session. Fed fund futures fairly unchanged. The 10-2 now at 70, which is pretty significant. Possibly getting a little bit closer to that being a recession signal. And we're seeing increased correlation between VX and cash VIX as short volatility positioning fails to find a strong foothold in the market. Leverage bounced back a little bit today. with the move up in the market, but remains substantially lower than it's been over the last 3 to 4 months. Um, and the spread between SOFR and IORB still about 10 points wide. So SOFR sitting at the standing repo rate, about 10 points higher than the IORB. Real time, like SOFR futures, kind of chilling in the middle there, but not really dropping substantially, down 1 point from Friday. Buy volume was fairly equivalent to Friday, so a bit of mean reversion there. Out here on the technical side of things, we obviously got a breakout after we closed above the 20 MA. We gapped over the 68.82 resistance, but we failed the 69.20 test. And we're rejected off of that fully into close here. 6,900 is actually not that important of a level, but I would look to see what resistance or support we open closer to tomorrow. Closer to 69.20 gives a little bit of a bullish bias for a push back up towards all-time highs, but opening under 6,900 would start to look like this wedge is failing a bit. We did slip through the bottom of the wedge on Friday, and that's not a good sign. I mean, that we filled that gap and then we had to, like, drop down another, $20 to find any buyers. And so, that does lead to some weakness in this bounce. And if we slip back under the 20-day moving average, it's very likely that this trend fails, which opens up, a move down to like 67.20 or even like 65.21. This is on the daily, but there's quite a lot of room to the downside here for us to start trying to find some support. So keep an eye on that. This is obviously, the consolidation starting to get very tight. So, and then actually that's a little bit off. There we go. Oop. Why is it dragging the whole thing? Don't drag the whole thing. Just move. There we go. There. I think that's about it. Looks like there's a little bit of rotation out of tech still ongoing. Health tech, which has been doing really well, is seeing some sell-offs. Broader electronic tech was doing okay, but the big movers like AVGO, Nvidia, Apple, not doing so great. Google and Microsoft pretty flat on the day. Meta showing some improvements. But Tesla and Amazon mostly carrying the Mag 7. Obviously some big moves in oil, and some process industries, industrial services, commercial services are doing pretty well, and producer manufacturing. This is likely where we're seeing the Venezuela trade occur, across these kind of interconnected energy and energy support industries and services. But yeah, obviously it remains to be seen what we're doing with Venezuelan oil, and that rotation could get shifted back pretty hard, if it doesn't appear like we're going to be getting any near-term access. So if you're like long Hal or Schlumberger or an NOV or Kinder Morgan or anything like that, just be really cautious with your gains, because the process to getting, U.S. oil field development companies into Venezuela could be very long. And financials doing pretty well today, with the drop in yields. Those largely carrying the S&P, I think. Anyway, that's about it. So thank you guys for tuning in, and I will see you tomorrow. Have a good night. Later.